you're having a good evening today, wherever you are in the world. I wanted to make a video today because I was thinking a lot about comparing, contrasting Microsoft and Apple and which one would be the better investment as a value investor and as a growth investment. And so what I'm going to do here is first I will talk about Microsoft and all the pros and cons of Microsoft, and then I'll talk about Apple, all the pros and cons, and then I will conclude with which one, in my opinion, is the better investment for the long term. It's not exactly apples to apples, and there's pros and cons to both of them. So with that said, let's get started. So on the screen you have Microsoft so far, and you can see here we'll try to ignore this Rona situation that we see here in March and April timeframe, but since then, along with the rest of the market, it's channeled up with good support, in the 200 range lately. You can see here where it has good support in the $200 range, and moving forward the past few days, it's at 213.29. So it's channeling up. It's got good momentum, and it's pretty much at the height where it was prior to the current Rona situation. Now let's go over some of the fundamentals about this stock. So if you see here, performance year to date 35.25, so not a bad return at all. Looking at traditionally for a stock, 10% would be considered I'd say anywhere from 6 to 10% would be considered a good return for a traditional stock. And Microsoft is on the verge of changing, turning over a new leaf into, they're a stable stock, but they're becoming more of a growth stock at the same time. Obviously, we'll get into the performance year to date versus Apple here in a little bit, but not bad at all. Actually, that's very good, considered very good. Look at these margins, gross margins and the profit margins. Usually profit margins around 20%. Those are pretty decent, but this one's creeping up into the 31% profit margin, which is very healthy. I think depending on the industry, you could have a profit margin of 2% or 3%, and that would be considered good. Or in the tech industry, you could have a profit margin of 30%, 40%, so seems to be in line with the industry altogether. It's above all the moving averages, the 20-day moving average. It's above that. The fundamentals of Microsoft, I don't think we need to worry about them going bankrupt or disappearing or anything. The quick and the current ratio, they're able to pay their short-term debt, basically. Optionable, shortable. Let's look at the shares. Share float, it's actually 7.49 billion, 7.58. So it's very mature and stable stock. Let's look at the volatility. It's 0.9, so it's a little bit under the market volatility as a whole. So that's really good if you're looking for a stable investment. And what I really like to look at these is I like to figure out what the dividend payment is. And from Microsoft, it's 0.96, which is pretty attractive for a tech stock. It's kind of a tech stock in a way, and in a way it's not, because it pays a dividend, and usually when a stock pays a dividend, it means it has more stability and in the tech. So if you look at Alphabet or Google, they don't pay a dividend, and quite a few of the tech stocks don't pay a dividend. So it's nice to see that Microsoft does reward you for holding their stock. So overall pretty good. Now, I want to talk a little bit about the products and the direction that they seem to be going. So, like I said, they want to target, changing the business model into more of a growth tech stock, which at some point in time in the early 80s, they had a good run, and they've hung in there. If you look at the commercial business or just business in general, everything runs on Windows, so they're just very, very mature uh, stock. And what's interesting is that the past few years they've been branching out into this large data center market. So by that I mean anything that's cloud based. So they are promoting cloud-based technology with Azure. And Azure, they've been winning over the government contracts because federal government needs to back up their files, and everything needs to be going digitally into a secure cloud-based technology. So, and then also uh, their Windows their Windows products are pretty solid. It's not an apples to apples comparison to Apple by any means, but if you look at some of these Chrome products, they're really not there yet. The software doesn't seem to be quite there. Windows is still dominating the market when it comes to secondary option besides Apple. So those are a few things, and I believe Microsoft will continue to grow. Will the growth be astronomical? No, I don't think it will be astronomical. They're not really competing with the phones, so they don't have a phone, at least that I know of. Maybe they do in a different country, but they don't have wearables. They don't have all of that hardware technology. Their software is solid, but still, if they had hardware, I think that they would be a little bit stronger. So now let's switch over to Apple. You know, as I said, it's still a very good company. It gives you a dividend if you're looking to if you own certain tech stocks and you're looking for a little stability and a dividend payment. So here we have Apple. So let's take a look. Again, it's not apples to apples. That's just a coincidence, but it's not an apples to apples situation. Apple is very different from Microsoft. They've been around a long time, but it wasn't until the early mid 2000s, 2005 that Apple finally regained its momentum. But let's take a look. So, ignoring again what happened in Roni Rona because that's just in my eyes an outlier. So look at the channel here. So and you go all the way from 250 to an incredible $438.66. You know, that's an incredible increase in the past. They just beat earnings about 3 or 4 days ago, and really nobody was expecting them to beat earnings, let alone beat them by a high margin. And I think this was the highest quarterly profit year over year that they've had, or for the quarter, uh, for the same quarter in the past history. So you can see there that it just jumped. And not only that, I was researching Apple, and Warren Buffett thinks of it as his third business. So it's 40% of his portfolio, if that gives you any idea on how bullish Warren Buffett is on Apple. And really, he's been on the hush hush since the Roni Rona. I think he was just processing everything. I don't know. Um, just my assumption. Again, do your own due diligence, consult your financial advisor, and never take advice from a random guy on YouTube. at least not financial advice. So here we go. Now let's look at some of the similar financials that we did for Microsoft. So performance year to date, 49.38. So they're returning about 10, 11 points higher than Microsoft. Let's see the overall performance year, so year over year, 126.89. That is incredible number, 126.89. That's incredible. So if you would have put, $10,000, you'd have about $24,000 right now. That is just unbelievable. For the past year, that's how much you would have had. It's above all the moving averages, so it's doing very well. The 20-day, it's 13.3%. It gives you a dividend a little bit lower than Microsoft, 0.75%, but for a tech stock, we'll take it. Let's see. Current and quick ratio looks like it's not as lucrative as Microsoft in this area, but again, there's nothing going to happen to Apple as far as going bankrupt or disappearing. Operating margins, not as high as Microsoft either, 25%, but it has more return on assets, return on equity, and return on investments. So financially, doing better than Microsoft in those areas. As far as shares outstanding and shares float, it's very healthy, 4.3 billion, 4.2 billion. I think the capitalization of Apple is reaching $2 trillion. And if anyone remembers last year, I think it was last summer, Apple was the first publicly traded company in the history of the stock market to trade at a $1 trillion capitalization. Volume is pretty healthy right now. It's about average. So yeah, now let's discuss the direction of Apple and where they are heading. So as I mentioned, Warren Buffett is bullish on Apple, and at first I don't think, because I've been tracking Apple for the past 10 years. I started investing in Apple the past 10 years, and I remember that Warren Buffett did not mention Apple, I think probably 11 years ago. Probably didn't really understand the business model. The tech industry wasn't his strong suit, but out of all the tech companies, he's chosen Apple, so that's got to stand for something. And if he's investing 40% of his portfolio into Apple, that's got to stand for something. Not only that, Apple has wearable technologies. They're very innovative and forward thinking. If we were look at the Apple Watch, that's probably been in the market, roughly less than probably 6 years, maybe. I want to say 2013, somewhere in there. Apple came out with the Apple Watch, and then the iPad, similar. And in the past decade, it's just been coming up with products that at first nobody knows too much about them, and then all of a sudden everybody has one. So if you look at Apple Watch, a good amount of people have them, as opposed to a few years ago when they first came out. It took a little while, but a good amount of people have them. Another thing as well is that I think it was leaked. The prototype was leaked that they're coming out with basically eye glass or something like that, where it's basically the virtual reality glasses. It takes them a while to come out with a product, but once they do, it's a very good quality product, and you can own it for a long time. So that's some of the direction, and they're partnering up with healthcare. So if you look at your iPhone, for those of you that might have one, you'll have, you can put all your health information from your checkup onto your iPhone, and then that gets stored uh, on the iPhone as well, so that basically what iPhone is trying to tap into the healthcare industry as well. So the Apple Watch measures pulse, and you can hook up you know, um, diabetes machines that measure your glucose up to your iPhone, and just a lot of things of that nature. So the growth potential is pretty robust, I should say. I was going to say endless, but I don't think that would be an accurate statement. But at least it's very robust. They offer a dividend, and for a tech stock to offer a dividend, that's pretty much unheard of. As an investor, you get your rewards from growth, but Apple is giving both growth and it's giving dividend investment just as a perk for owning the stock. So I hope that gives you a good idea of Microsoft and Apple. Both of them are very solid companies. The only con I would say for Microsoft is that they don't have wearables, and the phone market they tried, but I don't think anybody took to the operating system of Windows for the phones. So now I'm going to just go over, of the two, which one I would own. So I would definitely own Apple. As a matter of fact, I have owned Apple for almost 10 years, and continuing to look at opportunities to buy Apple. It is rather expensive, but they're going to do a stock split right now. So for however many shares you have of Apple, they're going to give you 4 shares. So they're just going to divide the price by 4 and give you 4 shares. So if you own $400 share of Apple, they're going to give you 4 shares at $100, and that's just their way of trying to get retail investors uh, to buy the stock and hold the stock. Otherwise, it's very hard for individuals to own the stock. So Apple is probably the way to go for myself. Uh, I would encourage anyone to do their own due diligence and just look at the track record that they have. It cannot be argued. Their growth potential is just phenomenal, and they're going to go through a product uh, life. Can't remember exactly what they call it, but it's basically a recycling of their product, where every 5 years or so they just come out with new innovative technologies. And we have 5G just around the corner, and Apple is said to be one of the uh, phone manufacturers that's going to be putting 5G technology into their phones. And they're just doing so many things. If I was just to mention a couple, they're going to start building their own chips. So they used to have Intel build chips for them, and I can't remember who else, maybe Qualcomm. Don't quote me on that, but anyways, they're gonna essentially build their own chips. And if you look at the phone chip technology, it's probably one of the more expensive components in a computer or a phone, just because that's where you get the processing speed. So essentially, they're going to make their own, and once a company does that, then they no longer need to outsource it, and that's just a savings for them in their pocket to increase their profit margins. So very, very innovative, and there you have it. So if I was to pick one, I would probably pick Apple, but again, uh, you don't want to put all your eggs in one basket, and Microsoft wouldn't be a bad idea to own some of that as well, just for some diversification. So I hope you've enjoyed this video. I hope it's brought some value to you and entertainment. I'm going to be doing more research on other companies. I've got Disney that I'm watching. I'm very bullish on Disney. They're actually changing their business model with Disney Plus and ad revenue. So that's another one that I'll be covering in the near future. So if you've liked this video, please subscribe, like, hit the notification bell. I would really appreciate it, and thank you for watching. Take care.